All right, we are now live on Facebook for another Thursday's Top Tips in Real Estate. Woohoo! Thank you guys all for joining, and we have some of the best lenders and realtors along the Treasure Coast here with us today. And every week we share with you guys the top tips in real estate. And today, each week we have a new topic. And today we're going to be talking about what is the real estate process in a timeline. So it's going to be a walk through real estate for you guys. And I think it's going to be a really exciting way that we're going to do it. And we're going to make it a little fun. So each person is going to have their own part in the process, and we're going to go through that. So and then after that, we'll go into kind of how we normally do with the number one tip of the week and then announcements later on. So starting it off with us is Dana, and she is going to go into pre-qualification. So
hello, everyone. My name is Dana Mainenti, and I'm with Guaranteed Rate Affinity. I am going to talk to you about pre-qualifications. And first, I'm just going to share my screen so you can see and follow along. Okay, so if you think about a pre-approval or pre-qualification, the process is three parts mostly, just the beginning part. First is credit. The lender will pull your credit. You don't have anything to do. Then we verify income. The way that we do that is we use the monthly amount that you receive before taxes are taken out. We call it the gross. We verify that with your pay stubs. We get 1 month full of pay stubs, so 2 if it's bi-weekly and 4 if you're paid weekly. And we also use your W-2s to verify the amount. So we get 2 past years, so 2019 and 2018. The next step is verifying your assets. So assets are important for your down payment and your closing costs. The way that we verify your assets are your bank statements, and we use the 2 most recent. So always think of 2 when you're thinking about gathering your documents. You definitely want to have your documents ready when you're getting pre-approved. When going back to assets, when we look at assets, if you have any large deposits, we are going to ask about that. So just kind of be prepared. Maybe look it over. If you have a family member that's going to help you, that's called a gift, and we would have to speak through that. So just to kind of put it all together, if you think about a mortgage, it's like a table. It has 4 legs. So the first 3 legs are the credit, income, assets. That's what we verify up front. And then the last part of the table is the collateral, the house. We get the value of the house through an appraisal, but that's not done until you find the home that you want. So then the next slide will show you some do's and don'ts. So once we are pre-approved, you do want to stay current on all of your accounts. You do want to use your credit as normal. You don't want to make any large purchases. And if you have any questions, if you want to make a big purchase, please call us first. But do not apply for new credit, max out your credit cards, change jobs, do any large withdrawals or large deposits. Don't go negative in your bank account. Don't use money overseas. Any of these things could change your pre-approval. So if you're looking for a home and ready to make an offer, we want to make sure that your pre-approval stands. And if you follow these great tips, then you will be able to go shopping for a house. And the person who's going to tell you all about shopping for a house is Codi.
Forgive me if I can. Is it good?
Yeah.
All right.
Yes,
so,
it is.
Got it.
All right. So once we get your pre-approval, we will have a number, a price range to find you a house in. We want to ask questions about your lifestyle. you know, what you drive, what you like to do, you know, whether or not, you know, what area of where in the world you want to live. We want to know if you want to shoot for a new build or a resale. We ask about, you know, what kind of neighborhoods you want to live in, you know, what kind of schools you're looking for your kids, what kind of activities you're into. And we can use all of that information to try to pinpoint, you know, a few houses that you can view. We'll create a list for you and get you set up so that you can view them all. You know, talk to the people in the neighborhood, see which neighborhoods best fit you. And then, you know, once you narrow down, you know, which house you like best, we'll go ahead and, you know, talk about an offer price and then make an offer on the house. And bear with me here. After we make that offer, oh man, this is.
Codi, what if it's in an HOA?
Oh, if it's in an HOA, Peter's going to explain all of that to you.
Awesome.
Thanks, Codi. Hey guys, coming to you from the road right now. I had a couple of showings, but I thought it was really important to reach out to you guys and talk to you today about HOAs. So HOAs stand for Homeowners Association, and the Homeowners Association is basically the governing body of wherever it is that you live, whether it be in a community or a condominium or a townhouse. A lot of them do have HOAs associated with them. Now, HOAs cover a range of things like cutting the grass. Sometimes they have clubhouses. Sometimes they have other amenities like pools. And some even come with utilities and TV. You just really need to make sure that you dig into what the HOA offers, as well as any fees that are associated with the HOA. So you're going to have more than likely a monthly fee with an HOA, and those are all be told to you beforehand and be affirmed to you at the closing table what you're going to pay. But there is something that you also have to look into: any special assessments. Now, special assessments usually take care of any kind of outside structures, including walkways and balconies. So make sure that if there's any elevators, walkways, balconies, pools, gyms, anything associated with the HOA, that you ask them about any special assessments that are going to be either levied in the near future or during that year that you plan on purchasing. Now, that comes in, that's very important for both just people that are looking to move into a residence or investors, because if you have these special assessments that could cut into your bottom line, you definitely don't want to take on too much debt when you take on a new property. So another thing that you want to look in for the HOAs, especially on the investor side, but this could come into play if you're a snowbird, is the amount of time that you're allowed to rent inside those HOAs. Some HOAs differ in range. You know, some HOAs don't allow anyone to rent at all, and some HOA only allow small periods of time. So make sure you ask those types of questions before going on to an offer. And with the offer process, we have Alannah. Thanks, guys.
Awesome.
Hang on just a second, folks. Hi there. I am trying to figure out my technical stuff here. The offer process is really exciting, and this is where an agent really has a big opportunity to shine. I'm going to share my screen here just for a tick. There we go. And so this is what we're gonna cover. The offer process, right? You found the home, you love the home, you can't wait to put your bid in. What now? Questions you should be asking your agent are, what are things that have sold recently that are similar in this area? Like, what's this neighborhood going for? Is this a good price? You know, you're looking to us as a professional to be able to advise you in that way. And, you know, maybe you have an agent who's really, really confident and they're rattling off homes. Oftentimes we've been in several in a community and we can give you a good estimate right there. But if you want to know more about it and you want to see that, ask them, will they be willing to do a market analysis for you? Can we justify this price point? Is there a better one for us? And in that way, we can be a part of that process and talk about it together, because you as the buyer and your agent, you guys are like this. You guys need to be on the same page with whatever's going to be on that paper, because that is a contract. The point where, you know, as an agent, we've shared that information with you. Here, listen, this price point is justified because of A, B, and C. You see it for yourself. Everybody's on the same page. Let's put an offer in. So at that point, as you know, as the agent, I have the responsibility of asking you for your data, right? I'm going to ask you for your license because I want to get your name done properly. I'm going to ask you for your address because that's one of the things I need for the contract. And aside from that, I'm going to be in communication with both you and your lender, making sure that you have that pre-approval you need to submit with your offer. We're going to go over all of the numbers. I'm going to take you through it step by step. You know, maybe you've done this before and you're really confident. At that point, you know, I just send it to you. If you have any questions about this document, please call me before you sign anything. I want to make sure you understand every single bit of it. And, you know, that's where we have our dialogue and that opportunity to shine and just really be that knowledge base for you. You understand it, you sign all the boxes, we send it off. At that point, it's our job to, you know, be flexible and be communicating with the agent who we're sending that offer to, so that we know, does our offer stand? Do we need to make an adjustment to make it, you know, stand out if we're in a multiple offer situation, where right now that's where our market is sitting, very much so. Every offer I'm putting in is a multiple. So that, you know, communication line and you being diligent, staying in touch with your agent. If they text you, they need an answer back. If they call you, pick up the phone. You're putting in a house today. Like, that's, you know, that's your commitment to making this work on our team here. So the point where you have all of those terms set and the other agent has accepted it, right? They go, oh my God, we're ready. These terms are great. You're definitely the strongest offer. We're going with you. We're going to go cover contracts, and we're actually going to hand that off to Katey so she can get a little deeper into that. So I'm going to unshare my screen real quick and I'm going to hand it back. As soon as I figure out how to do it. View options.
Lucy, am I in?
Lucy, can you
are in?
Oh, thank you. Alannah, fantastic. Thanks so much.
Yeah, take it away, hon.
When we're talking about contracts, we are talking about the as-is residential contract for sale and purchase. So within that contract, you've got guidelines, timelines, protections, and restrictions. So this is when we're going to be doing some true adulting. Please read it carefully, like Alannah said. Once an agreement is made in writing and signed by all parties, you now have a contract. Congratulations. Here's where some of our work begins. The purchase contract is a legally enforceable document. The contract is 12 pages and may have some additional pages for special contingencies. In these 12 or more pages, it covers almost every aspect of the purchase. We always want to stay within the four corners of the contract. There are some aspects that we can get creative with, but all agreements must be in writing and signed to be enforceable. A wise local real estate attorney once told me that verbal agreements are as good as the paper they are written on. So into guidelines, again, please choose a local expert. Listen to and communicate with your mortgage lender throughout the entire process. Your realtor and your lender should have the contacts and resources for every step of the purchase process. And they should be able to handle most unforeseen issues, sometimes without you not even being aware. Great realtors are like problem-solving ninjas. Timelines, there are important timelines or deadlines for your deposit, home inspection, financing, and closing. Talking about protections. What about my deposit? Your deposit, which is held in escrow until closing, is protected by contingencies included in the contract. Most commonly, your home inspection and your ability to obtain financing for the purchase. Question we often get is, do I get my deposit back if I cancel? Well, there are a variety of answers here, and all will have to do with the terms agreed upon and staying within those timelines and deadlines. Rodina will talk about the home inspection in just a few minutes, but the point I want to make about that is that in the as-is contract, the most popular and widely used contract that we have states that if the buyer determines in the buyer's sole discretion that the property is not acceptable to the buyer, they may cancel or they may terminate the contract by delivering written notice to the seller prior to expiration of the inspection period. So another common contract question, conversation that we have is about the washer and dryer, or a storage shed or pool equipment. So if you want that washer and dryer, make sure it's included on the contract. Just because it's marked as included doesn't mean that it will be included. It must be on the contract. Line 20 for you contract geeks out there. Moving into restrictions, there are provisions for the contract for both the buyer and the seller to perform. And if they don't, there are protections and guidelines for default. In the process, once you are under contract, you then make application for the loan immediately. Carol, can you tell us more about that?
Sure thing.
Bringing you up right now.
Okay, let me know when I am. Hi guys, Carol here with Gateway Mortgage. I'm here to talk about the loan application and the loan process. Now that you're under contract, you or your realtor will have given your contract to your loan officer. And what they're going to do is they're going to pull out your file from your pre-qualification that Dana had done. And we're going to make sure that your paperwork that you gave your loan officer during the pre-qualification process is still current, meaning by which the date of your application, your pay stubs, and your bank statements must be dated within 30 days of the application. So the loan officer at this time is going to choose to either lock your interest rate, or you can continue to float the rate and lock in at a later date. And they're going to disclose to you all of the required paperwork that explains all of the loan details to you. What that means is once you make that application in writing, they have 3 business days by law to disclose all of the terms of the loan. So once you have that paperwork, after you receive that paperwork, you have to give the lender your intent to proceed. Nothing can go forward from this point until you give your intent to proceed. So if you wait a week to give your intent to proceed, your appraisal can't even be ordered. So you want to make sure that you do that in a timely manner. So once the loan officer has your intent to proceed, your file is going to move into the loan processing phase. And the loan processor is going to take your application. They're going to order your title work. They're going to order your appraisal. They're going to order your insurance for you. They're going to order flood certifications to make sure the property is or is not in the flood zone. They're going to take your pay stubs and your W-2s, and they're going to start verifying all that document, all of that information. They're going to verify that you're still actively employed with your employer. They're going to pull quality control documents and gather all the paperwork that matches up your employment, your income, and your assets before the loan is turned into the underwriter. But during this time is when you're going to be getting your inspection, and that would be taken over by Rodina.
Thank you so much, Carol. So I'm going to be talking about inspections today. And here are a few of the main points that I consider on whether or not the home needs an inspection or not. Most of the time when you're getting a mortgage on the home, you have to pretty much, most of the time, it needs to have an inspection. So the only time I see people refusing to do an inspection on the home is if they are paying cash for the home. And so I just want to go over a few little points about that. So it basically boils down to a 4-point perspective. even if the home does not need a 4-point inspection, an inspector typically, his mind is focused on the major categories, regardless, like the roof, the age of the roof. Just because it looks good doesn't mean it's good. They want to see how old the roof is and if it needs any work, missing any shingles or anything of that nature. Next would, of course, be the condition with leaks and damages being a high priority. And that could also potentially cause issues for insurance if there are any leaks in the home. Electrical is something that an inspector typically looks for. What brand, the manufacturer of the breaker panels, and Federal Pacific, the Challenger could mean like trouble with reliability and insurability. So they want to check to make sure that the wirings aren't sticking out of walls and ceilings. And they also check for air handler and water heater issues, hardwired, and they make sure that most of inspectors want to make sure that everything is properly contained. No wires are just lingering. They also check for HVAC issues. HVAC stands for heating, ventilation, and air conditioning. And that's sort of simple, but what condition, they look for the age, like the condition it's in. And this could also be, you know, an insurance issue if the air conditioner is really old or having any issues. And they also check to make sure the AC is working, and the air handler has like float switch to stop it for causing water damage. And also plumbing is another thing. An inspector typically goes and checks the age, the condition, the water heater, and just to make sure there's no leaks and everything's active and everything is good for insurance purposes. Now, here is what happens if an inspection goes wrong. You know, there are times where people, you know, they may walk through a home and love the home and the home looks great, but internally, we don't know what may be going on with that home. So when we run across situations where the home may have issues like the leaks and, you know, roof issues or any plumbing issues, we tend to go back to the seller and let the seller know about these issues. And the seller will have to justify whether he will be able to repair the issues, if they're even in the condition to be able to repair it, because there are some people that are in situations where they just can't afford to repair some of the issues in their homes. So what they will do is pretty much try to renegotiate if it's possible. A lot of times, most of the time in a great situation, I see sellers, you know, if it's a big deal, if it's a roof issue, a leak problem, a plumbing problem, they'll try their best to make it work. However, there are cases where sellers may not be able to afford to go ahead and make those repairs. And when that happens, the buyer has a choice to either go forward and make those repairs on their own, or they may have to decide to pull out of the contract and sign a cancel and release form and go ahead and find another home that may be more, you know, more qualified and with less repairs. So, you know, it all depends on the scenario and the situation, but those are typically the routes, you know, that most buyers take. I'm also going to go into the appraisal section. So whether you are buying or selling a home, or even refinancing a property or trying to determine property's value for other reasons, you may want this to receive an appraisal on the home. So a real estate appraiser is typically the one that comes out to appraise a home. and the real estate appraiser provides a valuation of the property, and they will use an appraisal prepared by a licensed real estate appraiser. An appraiser will investigate the condition, the square footage, the location, and any additions or renovations. From there, he or she will appraise the home and determine its value. Offsite, the appraiser may also evaluate the current real estate market in the neighborhood to help determine the value of the property. Yes, the appraiser will actually visit the house during the home appraisal process. Therefore, there are specific rules that there's no specific rules that buyers cannot attend an appraisal, but the process is typically handled by the appraiser alone. You would have to contact the appraiser to make sure it's okay to be present, and get with him to make sure you can go ahead and visit the house, unless and then whenever there's an appraisal taking place, unless the amount of clutter in the seller's home affects the structural condition of the home, it will not affect an appraisal. The cleanliness of a home also has no impact on the value. It is not common for an appraiser to walk into a cluttered, messy home. However, I still advise my sellers to spruce things up before an appraiser comes by. Mow the lawn, make sure things are in order in the house, because that helps sometimes. It really does, However, if it's not a structural problem and it's just more of a messy problem, it's not going to affect the appraisal as much as it would, if it had to do with repairs and structure and remodeling and things of that nature. What hurts a home appraisal? Comparable homes or comps are one of the most important factors affecting appraisal value. An appraiser will take a close look at recently sold nearby homes with similar bedrooms, bathrooms, updates, and square footage to your home. And they will value these homes. And what they'll see is they'll try to provide a baseline for the appraisal value pretty much. Overall, the appraiser will give an educated opinion on the value of the home based on training and experience. If the appraiser is a good one, he or she does, if an appraiser is good at what he or she does, then the price will usually be close to the market value of the home, but not always. That doesn't always happen, since the bank will only allow you, the bank will only pay for what the home is worth, not a penny more than what it's worth. You will need to decide if you want to pay the remaining balance for a home if it does not appraise, or if you decide to go with another property. So that's basically what I have on appraisals. And now I'm going to pass it on to Gail with underwriting.
Hi, Rodina. Thank you so much for all that great information. Hey, everybody. This is Gail Kleemann. I am with Academy Mortgage, and I am going to speak to you guys today about underwriting. Let me get to my screen up here for you. There you go. Anyway, underwriting is a pretty integral part of the whole process. We've got he or she actually makes the final decision for the loan approval. They analyze the risk on the potential borrower.
We can't see your screen, by the way, Gail.
Pardon me?
We can't see your screen.
Oh, okay. I'm sorry. There you go. How's that?
We can't. You have to share it. You have to click share screen on those.
I did. Thought I did.
Sometimes it's like you have to.
Girlfriend, I did that too.
Okay, let me.
Because when you click share screen, it will give you some options of windows that you have open, and then you click on it and you have to click share again.
Now, let's see. Share screen. Okay,
There we go.
Woo!
All right,
Woo.
sorry about that.
That's all right.
Difficulty here. So back to the underwriter. They work with the loan officer and the processor once that they do their job, and the underwriter gets all the information and evaluates. They look at income, the assets, and the credit, as well as the property. And they make sure everything matches up to the application and that everything is documented properly. The underwriter really protects the company to make sure the loan is viable, and they want to actually protect the borrower to make sure they're not getting into too much, they're buying something they can truly afford. Typically, the underwriter can take 24 to 48 hours to underwrite the file. And it really kind of depends on how well the package is put together, actually. I know oftentimes underwriters are kind of viewed in a negative light. Everybody's like, oh, no, because they really pretty much, they make the decision. So you respect them. There really is a positive aspect because they really are our ally. You want to really work together as a team. To the complete file is really critical when you're submitting it. Bank statements, every page. I always tell people, even if it's blank, we want all the pages of the bank statement. Sourcing large deposits, there's so much that goes into what they evaluate. Many mortgage companies have what they call in-house underwriting. Basically means that they have their own underwriters and that they hire within. And that really helps the loan officer and processor. We can communicate better with our underwriters. That's what Academy has here. And we can keep the borrower better connected as well. So it's all pretty integral. So we work with the underwriter, and they really try their best to make sure it all makes sense, and they can give us the outcome we're looking for, which is an approval. So on that note, I'm going to turn it over to Tony because he's going to share our 3 favorite words that we have here in the mortgage world.
Gail, you set that up perfectly. It's basically party time. So it's clear to close is where we're at now. So the clear to close, I don't know. Let me get this light back on so you can see the screen and everything else. But clear to close is where everything to us as lenders and yourself is the biggest 3 words that we can come across. So this is at the point, I'm trying to share this. There we go. Clear to close simply comes down to stating everything with the loan process has been completed when it comes to the underwriting. So you as a buyer have been approved by the lender. You're able to move forward with the loan. It's the happiest day that as a loan officer, there is nothing better than making the phone call to a client or to the realtor saying, hey, we have the clear to close, or on our end, in our lingo, we call it CTC. So if you hear those words, it's like magic. So finally, there's other things that do need to happen afterwards. So once you receive the clear to close, a lot of times, depending on how close you were to getting the loan started and where it was at, what you'll have is a CD. So typically you may receive the CD prior to closing or receiving the clear to close. However, if not, once you get the clear to close, what happens is now the lender and the closer on the lending side has to make sure their numbers also coincide with what the title company has. That way, everything you're signing at closing matches up and everything is in good standing in case you had any, credits back, anything else, have to make sure things match. The one big thing in the last paper you'll sign from the lending side will be called what's a CD or a closing disclosure. That is what the lender and title will match up with, making sure to get you your final numbers. And from there, you're so close. The steps are so close. Again, I can't believe I ended up with this topic because, quite frankly, this awesome group here had a meeting after our last one that I had to jump off on, and the other lenders in this group that are all phenomenal, they gave me the clear to close, and there's nothing better as a lender than this. So, but from there, besides the clear to close, there's a couple other steps. And the next step is obviously you don't want to be moving into a home when you haven't seen it before you're moving in. You saw it when you purchased it. So Antonella, can you give us a little info on what they're going to do prior to getting those loan docs signed?
Absolutely, Tony. Let me get you there. So now we have the final walkthrough. I don't know if you guys can see it.
We can see it. We got it.
Oh, okay. So it's picture time. So can you see only the picture time, or
yeah, it's good.
Okay, sorry. So it's picture time. So basically what we do on the final walkthrough is, like Tony said, make sure that everything that we saw on the first day that we absolutely fell in love with the house is still there. So what I recommend to do is just, walk around the house, make sure you open the faucet, make sure the water is running, turn on the lights, turn off the lights, give a quick, check to the appliances that are there. And if anything is wrong by any chance, there is still a way to get some money credited back to the buyer in case there is absolutely something that pops out at last minute. So there is still an option there. There's still something at the end that can happen. So that's why it is important to do the final walkthrough. It's not just, oh, okay, let me see, let me check that the roof is still on the house. But yeah, you do want to check that the roof is still there, and you do want to check that everything else is still there. And once everything is still there, and we do take the pictures and we can celebrate, and before we do that, we go directly to the title company, and Lucy can take it away from here.
Perfect. Yes, I will. All right. So it's closing day, the most exciting day in the whole process, right? So you have you're closing on your house, and this is a day where we celebrate. You guys get to celebrate. You and your realtor are usually at that closing table signing away those papers, and we want to make sure that you guys understand everything that you guys are signing at the end of the day. Like Tony mentioned, you will get your closing disclosure, and we will send you that paperwork ahead of time to make sure that you guys know what you guys are going to be coming in to sign and that you understand it. So there are a few things that come along during the closing day, and some of the things that we do need to make sure that we have valid identification for you to make sure that you are the person that's purchasing this house. And then if you are in an HOA community that Peter had highlighted earlier, we are going to need a certificate of approval from that HOA community that you have been accepted. So those are the two main things that we're going to need there. One of the things throughout the whole process with wire fraud, I want to mention wire fraud. It is a big thing that a lot of people need to be very careful about. We've done videos on it and everything like that. But for 24 to 48 hours prior to closing, we will request that you fund the funds that are due for that process. And we actually will mail you instructions ahead of time if there's enough time to be able to allot for mail. If we don't have time to be able to mail them to you, then we will email them to you, password protected. We will never tell you that. We will never email you and say, hey, we've changed the wire instructions. Make sure that you wire it here. Like, we're never going to do that. Make sure that you guys always verify those wire instructions. We make sure that you guys call us. You have to call us for the password so we can verify who we're speaking to, that you guys are the ones who are going to be funding the wire. And we just want to make sure that your money is safe, because if just one thing goes wrong with that, your money could be going somewhere that it doesn't need to go. So we take that very, very seriously, and we, try to guide you in every way to make sure that you guys are safe with that process as well. So if there is a lender involved, that wire must come from a bank that's vetted and approved by that lender. So that is another important part to keep in mind. But we really try at Arrow Title Services, we really try to make the closing day experience really fun. We do like a little photo next to our wall. Maybe if you have a gift that your realtors are giving you, we take a picture, and it's just a really exciting day. We actually give this little picture that I have right here. We actually give these Polaroid photos of you for your closing day that you can keep as a memory that, hey, you guys closed on your first home, or whatever home it might be, but it's an exciting day and we like to celebrate with you. And we also give you the keys to the house. So it's an awesome process, and there's so many moving parts, but we want to make sure that's why we did this today, right, guys? We wanted to make sure you guys understood exactly how the process went. And yeah, so we'll go a little bit into, now that you guys have seen how the process is, it is Thursday's top tips in real estate. So if anybody has any major tip that they want to share, I'll go around and everybody can say their little spiel for their Thursday's top tip today. Everybody had great presentations too. I loved it. I love what everybody had to say. Dana, do you want to start us off with your tip of the week? You're muted.
Okay. So my tip of the week is to trust your lender, and if they tell you to lock in your rate and, you know, don't risk the market, you know, lock it in. They'll give you all your options, you know, by floating a rate that could greatly change when you're going into underwriting. Like we said on this call, we're working towards underwriting approval. We're looking for a clear to close. And the way that the market is, it's so volatile, you know, it could change drastically, and that could change the decision of the underwriter. So take advice from your lender.
Awesome. Carol, do you have a tip for the week? You're still muted.
I can't think. Yeah, my tip this week is stick to a budget. Make sure before you start that pre-qualification process that you have a budget. It's extremely important. It's one of the first questions I ask my customers when I'm pre-qualifying them, because they have an idea of how much they want to spend every month, but actually take the time to do the full budget so that once you're in that house and you stick to that budget, you should be able to manage your payments.
Awesome. Thanks. Katie?
Oh, thanks, Lissy. I forgot to say, Katey Bourgeois with the Bourgeois Real Estate Group. I would say that the top tip from me today would be something that we've already said, and that's to read the contract and ask questions. And that can be applied to all of the information that your lender is giving you as well. Whatever the realtor gives you, we're giving it to you for a reason. And whatever the lender is sending to you, we're giving it to you for a reason. Read it, please, and then ask questions.
Love it. Alannah?
Katie, thank you for the reminder. I'm Alannah with eXp Realty. Seen me at the Dean's List group. My tip is that, you know, less is not always more when you're buying a home. Cutting corners does not pay off. It just doesn't. You know, get the inspector who costs a little bit more. They're going to do a better job for you. You're paying for quality. And same with an appraisal. You don't want to make an investment this big without making sure that it is what you think it is. So do your due diligence. Don't skimp on the bits.
Awesome. Thanks, Alannah. Gail, do you have a tip?
Sure. Hi, everybody. I would say, I always tell my borrowers is please be responsive and quickly when we're asking for documents. So often, if they get us everything, you know, within the 12, 24 hours of us asking, it can just streamline the whole process and make everything move so much smoother. Because if we lose 2 or 3 or 4 days up front waiting on things, we're paying for it at the end, and we could be scrambling. So we like to avoid that. We want to have plenty of time to get to the closing, get that clear to close. So just ask everybody to really be responsive and get us what we're asking for.
Awesome. Thanks, Gail. Antonella?
Yeah, I'm here. Antonella, just like Katie did it. Antonella Zervopoulos from Atlantic Shores Realty. Just like Dina said, I just wanted to say, have a conversation with your real estate agent as well. As a lender is a professional in their field, we also are professional in our field. So if you come at us with a certain price point that you wanna, try to achieve, then there are, different ways that we can go about it. And definitely, if you're looking for a big house, you may have to be in a way creative about how you can get to that big house. So you know, just have the conversation with your real estate agent in order that, you know, in order for us to get you where you want to be. And that'll be it.
Great. Thanks, Antonella. Rodina?
My tip today is for the buyers out there. I just want to say to the buyers, I know it seems like inventory is low, and I know sometimes it could be frustrating, especially those buyers that may be under the $200,000 mark. You might be putting in contracts. There may be, you know, multiple offers within hours, within days, but do not stop looking. New homes come on the market every day, every single day. Do not give up. Do not get discouraged. Do not stop looking, because you never know when that diamond in the rough might show up. Okay. That's what
Awesome.
I want to share.
That's a great tip. Codi?
I'm gonna jump on that bandwagon. Codi here from Bourgeois Real Estate Group. I guess I'm gonna kind of piggyback off of what she just said. If you're gonna jump into the market, make sure that you're ready to jump into the market, because there is some competition out there, and these houses go quick. You're gonna have to pull the trigger, and they're gonna be things that we need, and we need you to, you know, get them to us right away. Time is of the essence. So just be sure that you're ready.
Love it. Tony?
Yeah, I'm gonna follow suit because I don't know if I even said my name or anything else either. So Tony Garcia with CrossCountry Mortgage. Now I'm gonna piggyback even more. Carol, I don't know if you can see it, but I have a budget. Don't mind my handwriting, by the way. It's terrible. But as well as a budget as of now, what I always try to tell clients as well is look forward a little bit too. So taxes are gonna change most likely, especially in this market we're in. They can change extensively. So have a budget looking at future taxes. Also make sure that, you know, hey, is your car about to need traded in and you need to get a new car and new car payment? Don't put yourself in a hole before you get the house, because nothing good can come of it. You know, even if, you know, hey, you plan on having a baby, things happen, things you have in life, you know, are going to be coming up, possibly. Sometimes unexpected, it happens, but, you know, a car, being able to go get an auto loan, knowing that you're going to have to do repairs to the house. Take that stuff into consideration when you're doing your payment, because overextending yourself, unfortunately, does not help you in the future to keep that equity and everything else. So just make sure you're not looking at today. Make sure you're kind of preparing, not for 10 years down the road, but at least 30 to 60 days of moving into that house of where you need to be budget-wise.
Yes, love that. Peter?
Hey guys, Peter Negron here with the Hunt Group, powered by Keller Williams. I forgot to add that a little bit earlier too. I was driving, so forgive me. One thing that we all talked about here on this call, and that you really need to think about whether you're a buyer or seller, is to look for the value. That's what everybody here was really, really harping on, is the value. Not just the value of the house, not just the value of those little appliances that are inside the house or where the neighborhood is, but look for the value in everything in real estate. Look for the value in the vendors that you choose. Look in the value of the real estate person that you choose, the title person that you choose, the lender that you choose. You know, things are different for different people. So make sure that no matter what, you look for the value in each of those people that are helping you, because you need to trust them, and you need to be able to look back, you know, 5-10 years from now and realize that you made a sound investment. So that's it for me.
Awesome. That actually leads into what I was going to say. My little tip this week is going to be just breathe, relax. It's all going to be okay. We know that there is a lot of moving parts, and we know that it can be a lot on the home buyer or the seller in general, but with the right professionals behind you, you're gonna be okay. They're going to help you. And as you see, the professionals that are on here today, these people are taking time out of their day to share with you these amazing tips, and you can trust them. I trust them. Like, we all trust each other, and we all work together in this process. So you guys can contact any of these realtors or lenders. Their information is in the description. So make sure to give them a call, contact them. They are awesome. And I think that speaks for themselves. I mean, I don't have to say that. You guys can see that. But, you know, I really appreciate you guys coming on every week. This is such a great addition just to put out there any information out there. For you, those of you who are watching, if you guys have a topic that you guys want to hear about, that you're just itching to hear about, let us know. We'll do it. So we do this every Thursday at 2 p.m. So make sure to join us next week. Does anybody else have anything else to add?
What time is that?
2 p.m. on Thursdays. All righty. Well, we will see you next week. Keep tuned to hear what next week's topic is going to be on. I can't speak apparently. And we will see you then. Thank you all for joining us, and have an amazing rest of your week. Bye.
Bye.
Bye, guys.
Thanks, everybody.